Lord O'Neill, it's great to have you back. Thanks for the time this morning.
You're welcome. Nice to be with you, even though things are a bit of a mess.
Yes, we've been talking a lot about that. And I don't mean to be Pollyanna about it, but I do wonder, when you think about things that could potentially go right or things that have been going wrong for long enough, what comes to mind right now?
Well, I think the last couple of times I've been on the show with you guys, I've said that at the start of the year, even before the Russian invasion, I'd never come across an environment in my near 40 years of which there were so many big issues where I didn't have any confidence about where we'd end up settling. And it seemed to me, a pretty bad cocktail of risks to face us. And then we have Russia on top. So at the core of it, I'd say to the first part of your question, what could make it turn? If for some weird reason there was any of surprise settlement to the Russian invasion of Ukraine, out of the blue, obviously, or even better is if something happened with Putin no longer running Russia. I think that would be a huge positive surprise. And then away from that and linked to what you guys were just chatting about, if we started to see evidence of inflation now turning, that would obviously be, going back to what I said about my views before the invasion, that would be a huge relief. And I have to throw in an optimistic bone there. It continues to intrigue me that long-term measures of inflation expectations, particularly the 5-year Michigan one, are actually pretty stable. And so, we've seen central bankers flip from trying to tell us all this is transitory for 2 years to now making out they're more hawkish than Paul Volcker and et cetera, et cetera. And all that tells you is that they're following the developments as the same as the rest of us. So if inflation started to come back down quite sharply, then the central banks would change their mind again.
Right. Although I do wonder, one thing that was talked about over the weekend was, okay, maybe you get some relief in the data that leads you to an inflationary point of view, but is there some human element at the Fed that now feels that no matter how much the data turns, they have to prove their point and regain credibility for those who maybe think they lost it?
So I was worrying you might ask me that one, because that's where I'm struggling with my own view about anything other than a bounce. We can really get too carried away for a while, because I suspect that what this has all unleashed within the central bank groupthink around the Western world is it's sort of made them realize that the whole QE game has just gone on for far too long. It's something I've thought now for a good 2 or 3 years. The evidence just didn't warrant it going on even before events involving COVID. And I think a lot of them are going to be thinking, well, we need to get out of this ridiculous situation and have some kind of return to the old days of where short-term rates were vaguely positive to the inflation rate. So you had some kind of positive real rate. And I think, frankly, that is the reality of what we're going to eventually have to have. And all this stuff about declining neutral rate and the savings glut, which all, in my view, became very convenient excuses the past 15 years to explain the never-ending drop in short rates. I can't really persuade myself that we're going to stick with this never-ending world of rates have to be as low as as low as you can think of forever, even if inflation does turn. But I do think if we're seeing evidence of inflation starting to turn, that would give us a big bounce. But I'm not sure it would be the start of some permanent new bull market.